Welcome to Degens Journal, the news hub where crypto never sleeps and data rules the game. Today, we've got the 5 hottest crypto headlines shaking up the markets and lighting up social media. Is Apple about to go all in on Bitcoin? Is Trump's nominee pushing blockchain from the regulatory front? Is South Korea legalizing stablecoins? And keep your eyes on Ethereum, because staking just hit record highs. Get ready, the future is being written in blocks. Today's headlines. Michael Saylor says Apple should buy Bitcoin after a disappointing stock buyback. Trump's pick for the CFTC says blockchain will transform society. South Korea pushes forward a law to legalize national stablecoins. Bitcoin and crypto stocks rise as more companies reveal BTC purchases. Ethereum hits all-time staking high as ETH breaks past $2,700. News breakdown. 1. Saylor suggests Apple should buy Bitcoin. Michael Saylor, co-founder of MicroStrategy and one of Bitcoin's most vocal advocates, has once again ignited debate on X, formerly Twitter, with a provocative idea: Apple should buy Bitcoin. His argument? Apple is sitting on a mountain of cash over $160 billion, and according to Saylor, it's not using it effectively. The company has been funneling billions into stock buybacks, yet investors remain unimpressed. Even financial pundit Jim Cramer admitted, Apple's buyback isn't working right now. Saylor believes this is the perfect moment for Apple to pivot. Instead of repurchasing shares at high valuations, he suggests Apple should allocate a portion of its reserves into Bitcoin, just like MicroStrategy did, and later Tesla. For Bitcoin maximalists, this isn't a wild gamble. It's a calculated strategy to protect value against inflation, diversify treasury assets, and send a powerful signal to both Wall Street and Main Street. Let's remember, when Tesla announced its $1.5 billion BTC purchase in 2021, Bitcoin's price surged nearly 20% in a single day. Now imagine what could happen if Apple, the world's most valuable company, made a similar move. It's not just about market optics. Apple entering Bitcoin could legitimize BTC further as a corporate treasury asset, trigger a wave of institutional adoption, push Bitcoin into a new valuation range entirely. Of course, critics argue that Bitcoin's volatility makes it unsuitable for corporate treasuries, but Saylor counters that argument by pointing to long-term performance. Over the past decade, Bitcoin has outperformed every major asset class, including Apple stock itself. So the big question is, will Apple take the leap, or will it continue down the traditional path of capital allocation and risk being left behind in the digital asset revolution? And from a market perspective, would such a move be the spark that launches the next full-scale bull run? 2. Trump's CFTC nominee. Blockchain will reshape all of society. Brian Quintenz, nominated by former President Donald Trump to lead the U.S. Commodity Futures Trading Commission, CFTC, is sending a strong and clear message about the future of blockchain technology. Quintenz is not just viewing blockchain as a financial tool, but as a fundamental social infrastructure that could redefine how industries and societies operate. Drawing from his experience at a 16Z Crypto, one of the most influential venture capital firms in the crypto space, he has emphasized the urgent need for the United States to establish a clear and forward-thinking regulatory framework for blockchain and digital assets. Without this, he warns, the US risks losing its competitive edge in innovation to countries with more progressive policies. Quintenz describes blockchain as a horizontal technology, meaning its impact will cut across multiple sectors, from finance and healthcare to supply chain management and government services. This technology's ability to create decentralized, transparent, and immutable records means it could reshape the very foundations of how businesses and governments operate. For years, the US regulatory environment around crypto has been fragmented and uncertain, causing hesitation among institutional investors and developers. Quintenz's nomination signals a potential shift toward clarity and support. If the US adopts a pro-crypto regulatory stance under his leadership, it could open the floodgates for a new wave of institutional adoption, fueling innovation and economic growth. The question remains, will this appointment mark the turning point for America's blockchain leadership? And if so, What ripple effects will it have on global markets and the technology's adoption worldwide? 3. South Korea moves to legalize national stablecoins. While the West debates regulatory frameworks, South Korea is moving fast to build a clear and regulated digital asset ecosystem. Newly elected President Lee Jae-myung is making good on his campaign promises to modernize the country's approach to cryptocurrencies and digital finance. His ruling party has introduced legislation that would allow companies to issue national stablecoins, cryptocurrencies, pegged to fiat currencies, designed to minimize volatility under strict regulatory conditions. To qualify, issuers must maintain sufficient reserves backing the stablecoins and hold a minimum capital requirement of around $368,000 USD. This move is significant for several reasons. It provides a legal foundation that could spur innovation by giving companies the confidence to develop new products without fear of regulatory crackdowns. It aligns South Korea with countries like the US, Switzerland, and Singapore, which are racing to lead in crypto regulation and innovation. It could strengthen South Korea's position as a global hub for blockchain technology and digital finance. Stablecoins have become critical in the crypto ecosystem because they facilitate faster, cheaper, and more stable transactions compared to traditional cryptocurrencies. But their rise has also raised concerns about transparency, security, and systemic risk. By legalizing and regulating stablecoins nationally, South Korea aims to balance innovation with consumer protection, setting a precedent that other nations may soon follow. The big question now is, are we witnessing the start of a global race to legitimize stablecoins? And how will this competition shape the future of global finance and cross-border payments? 4. Bitcoin and crypto stocks rally after institutional buying news. Monday brought a wave of green to the crypto markets, signaling renewed investor confidence and momentum. Bitcoin, the flagship cryptocurrency, experienced a notable price increase, sparking optimism across the board. But the surge didn't stop there. Shares of several major US-based companies linked to the crypto industry also climbed steadily. Circle, the fintech firm behind the USDC stablecoin and recently listed on the Nasdaq, jumped an impressive 7% during the trading session. Other key players such as Core Scientific, CleanSpark, Marathon Digital Holdings, Mara, and Riot Platforms also closed the day with positive gains. This rally appears to be fueled by announcements from public companies revealing that they are adding Bitcoin to their corporate treasuries, a move that signals growing institutional acceptance of Bitcoin not just as a speculative asset, but as a strategic store of value. These companies view BTC as a hedge against inflation and currency devaluation, similar to how some corporations hold gold. While price volatility is common in crypto markets, this pattern of corporate adoption could mark a deeper shift. It suggests that Bitcoin is increasingly being embraced by serious institutional players and not just retail investors or crypto enthusiasts. The key question now is, are we witnessing the dawn of a new wave of institutional adoption, one that could provide sustained upward pressure on Bitcoin's price? Or is this simply a technical bounce, a short-term reaction to market dynamics that could fade quickly? Only time will tell, but the market is watching closely. 5. Ethereum breaks staking record as ETH tops $2,700. Ethereum continues to demonstrate its resilience and growing dominance in the crypto ecosystem. This week, Ethereum hit a significant milestone by setting a new all-time record for the amount of ETH staked on its Beacon chain, the underlying proof-of-stake network that secures Ethereum after the merge. More than 34.6 million ETH, representing nearly 30% of Ethereum's total supply, are now locked in staking contracts. This is a major indicator of long-term confidence among holders who are willing to lock up their assets to support the network's security and governance in exchange for staking rewards. Simultaneously, the price of ETH surged past $2,700, reaching a 12-day high. This price movement has been largely driven by increasing accumulation from institutional investors who see Ethereum not just as a platform for decentralized applications, but also as a valuable digital asset with strong growth potential. The combination of record staking and rising prices creates an interesting dynamic. More ETH locked up in staking means less liquid supply available for trading in the open market. This reduced supply can create a scarcity effect, putting upward pressure on prices, what some analysts call a bullish pressure bomb. All eyes are on Ethereum now, asking, is this the start of its next major price rally, potentially pushing ETH toward the $3,000 mark? Given its technological upgrades and growing institutional interest, many believe it just might be. That's all for today on Degens Journal, your unfiltered crypto news hit. Which of these 5 stories do you think matters most for the future of the market? Saylor's bold proposal, South Korea's regulatory leap, or Ethereum's staking surge? Let us know in the comments with the word Breakout so we know you made it to the end. And if you liked this fast, sharp, no-fluff breakdown, subscribe, hit that bell, smash the like button, share this video with your trusted crypto crew. See you in the next edition.